Hi, friends. This is Mason. There has been an event that I thought maybe it would be wise to try to share with you. There is a funding mechanism that banks use. They've got certain reserve requirements that they have to have or cash on hand to be able to function. And when they get low on that cash, they've got to go to what they call the repurchase or repo market. And these are sometimes just overnight loans. And back in 2007 or 8, Lehman Brothers was a investment house, and they went to this repurchase market because they needed some cash, some extra liquidity. And the repo market, the other banks would not loan them money because the collateral that Lehman Brothers had presented was mortgage-backed securities. And at that point, you know what happened with the mortgages. They started giving them to everybody, and we had a huge bubble in the real estate market. And that's what happened with Lehman Brothers. They just could not get a loan to be able to take care of themselves. And fast forward today, we have the same thing going on. Now, these banks that make these loans have looked at the underlying assets of these banks that need the loans. Of course, the fact that they need the loans is troubling in and of itself, but overnight loans anyway, it's like pawn shops or something. You're really desperate when you got to go to the pawn shop and get a short-term loan just to buy gas to be able to get out and operate. It's troubling to me that there is a repo market and that banks would need these overnight loans. Apparently, they're usually really secure. They're done all the time, and the assets that they're presenting for collateral are acceptable. But right now, for some reason, whatever these banks are holding on to is assets, whether they're mortgage-backed securities or corporate debt or whatever it is. Apparently, to the people that know what's going on, they're saying these aren't valuable. We don't want them. And so these overnight lending rates, short-term loan rates that are normally, real low, 1% or something, they shot up to 10%. And in order to keep the banks insolvent or keep the banks solvent, they had to go in. The Federal Reserve stepped in and is now the lender of last resort. And the Federal Reserve has been doing this since, I think, September 11th. And right now, the balance on these loans, what the Federal Reserve has committed to is like close to $300 billion. The entire bailout in 2008 was only $720 billion, and all that money went to the banks, and it kicked the can down the road. And to where now we've got this huge bubble. Everything's a bubble. The stocks are in a bubble, real estate, corporate debt is crazy. Even like IBM is 72 billion or million. Anyway, some crazy amount. All these corporations are in debt. And I'm hearing that some corporations have to issue bonds in order to pay the interest on the current debt that they have. So they're having to issue debt to pay the interest on debt. And things are just getting pretty squirrely. And I'm really concerned about this sort of stuff to the point I'm not in the market at all. I'm keeping a minimum in the bank. Anything I've got extra, I'm trying to put into silver and gold that I hold, and not, paper silver or anything like that. And all of this is very troublesome. We could be on the verge of a complete meltdown in our financial system, way bigger than 2008, because 2008 we were able to bail out the banks and keep them going, and that was only $1.5 or $1.7 trillion in bad mortgage-backed securities. Well, now it's even bigger than that, and there's so many angles, so much debt out there that I don't think they're going to be able to do it. And I think they're not going to be able to kick the can down the road. I mean, that's what they've hoped to do, but I don't think they're going to be able to. I think all we're going to be able to do is scuttle our fiat currency. And that means everything that's based, all the assets or debts that are based in this stuff are going to wind up going down the hole. So it's going to be good if, you may not have a mortgage or a car note or a student loan after this, but for those that have a 401k or a pension coming, it's going to be really hard on those folks. EBT cards may shut down. I think it's getting very serious, folks. I'm hoping all of you will at least look into what I'm saying. I mean, I may have gotten bad information, but I've gotten it in so many different places, and I've been studying this stuff quite a bit. I don't think I'm wrong in this. But please verify it and look at your life and what you're going to need to do to protect your family, and see if there's some adjustments that you might be able to make, because $300 billion they've already injected into banks, which means the banks, they need a lot of money, which means they ain't doing good. This is some bad mojo, I think. So please look into it. I'm making all the preparations I can for me and mine. Please do the same.